Oh, that's a good question. I think there's a lot of different opportunities, and there are probably a few concerns as well with, concerns that are fairly similar to what we're facing in the broader credit market and economically overall. So clearly, inflation is going up, rates are starting to increase, and it will be quite critical for quite a few of those companies to try and pass that on to consumers, and the ones that are not able to do that will probably start to have a hard time, and that might see defaults go up in sort of the medium term. So that might be a bit of a concern. However, I think when we look through the companies we invest in, they have come out of 2021 really solid. They look very good on their earnings, on their growth. It's all it's a very nice starting point. So there's a lot that they have to stand against the inflation with. Sure, private debt, right? I mean, we've seen a lot of growth in private debt, and I think we're going to see continued growth in private debt. There's a lot of money being allocated to private debt these days. There's a lot of managers raising funds, and there's generally just a lot of attention on private debt, and there are many deals to be done. There's a mid, sort of the mid market within credit is not that well financed. Doesn't have access to the liquid markets, so traditionally they are stuck with their banks, and we're definitely seeing a lot of interest from private equity sponsors in getting those mid-sized companies financed in a different way. So I think it's going to be a lot of interest and a lot of attraction to private debt continue over the next few years. ESG is probably the number one factor out there at the moment. It's on everybody's minds, and it's I think by now probably in everybody's process, at least in most people's process. I think it's driven by a few different things. I mean, it's both driven by LPs and GPs. So clearly, our investors are facing us with their ESG requirements. We've built that into our processes a long time ago, so that's very good. But it's something that's developing a lot, and you need to continue to develop your ESG skills and processes to keep up with that. I think the good thing here is that it's really such a big theme from a regulatory perspective, from LPs, from GPs, even from the corporates themselves. So there's just so much attention, which means that you're going to get more data, we're going to get more attention, we're going to get better reporting, and probably a better product. That's a good question. We haven't seen much of it so far in terms of the secondary market. Will there be a secondary market sort of over, if we start to see a bit of an economic cycle, maybe that's what's going to spark a secondary market sort of starting up. We haven't seen that much really. We're not active in the secondary market either, but we're not seeing and hearing a whole lot with regards to that. But let's see if an economic cycle can get that market going.